chair you see, that's all cursed to traffic on the Gurgaon road. Ntasha will join in a bit, precisely in 5 minutes. I'm happy to moderate this panel. This is always the exciting part when it comes to disrupt summits. I mean, the day has gone in talking to a lot of entrepreneurs from different sectors, but this is the time this is the time we talk to investors, key people in the ecosystem. Now that I know that Niyaz is coming from Lumikai, that precisely into gaming sector investing, and Rahul is, of course, has already talked about AI and investing in it. Today, the question is, in India, there is no dearth of money. There's no dearth of money. The only differentiator between the capital is that what we don't have is patient capital. We have momentum capital, we don't have conviction capital. That's the only differentiator we have, but we have a lot of money. Is that the case?
I don't think so. If you look at the last couple of years, you wanted contradictions on the panel, so I'm happy to.
This is the bigger part that we'll decode on the panel.
Yeah.
And also, apart from this, given that these leaders are coming from sector-specific investments experiences, we will discuss what sectors are witnessing green shoots in their areas, and also we will talk how much of dollars are flowing into Indian ecosystem, and looking forward to that point. But in your initial remarks, tell me on my initial remark saying India does not have dearth of money. What's your take?
So you also already qualified it by saying it has dearth of patient capital. So yeah, I think there is limited patient capital. It's grown, but I mean, to your point, if you go back 5 years, the amount of patient capital you had versus now is much better. And see, understand one thing, our venture ecosystem is about 25 years old. I mean, the first funds came late 90s, just at the internet boom time. That was the first funds which came in, which means we've seen maybe, 10-year being a fund cycle, we've seen 2 fund cycles happen. On the other hand, in Silicon Valley, this has been going on for 70 years, right? So there's a huge difference in the kind of capital you can get access to, because you've proven your track record over multiple cycles, right? So Indian ecosystem should be help. So we can very well say institutional investors should just give us all fund managers the capital, and we will deploy it very well, and you should be patient for the returns to happen. But it will only happen once we build track records. To build track records takes time. In this industry especially, it takes a long time. So patient capital, it's not just a one-tier problem, right? When you talk about patient capital, people are mostly talking about how VCs are deploying capital. And VCs in India are typically a 8-year fund or a 10-year fund, and thus they are not patient capital because they can't hold that capital for long, right? Their positions for long. But you have to start thinking, where does capital originate from? It doesn't originate from VCs. VCs take money from other investors, and they may be collecting money from even other investors. So there are multiple tiers to it. And at each tier, patience is a thing which grows over time. It's not going to happen immediately. At the same time, can the government do more to make more patient capital available? Yes. Is the government working on it? Yes. So directionally, we're in the right space. Can a VC ecosystem do with more patient capital? Absolutely.
Good one. Niyaz.
Yeah, I think the biggest sign of evolution of this ecosystem has been specialization, and Rahul was early to that in seeing AI come up. And now you're seeing more AI funds emerge, and what we invest in, which is interactive media, digital platforms and games. We were the first. Now there's some more who are coming to that. But even if you look at, let's say, like D2C brands, now you have at least a dozen funds who only invest in D2C brands. You also have a dozen or more funds. I was counting the other days how many funds invest in deep tech. There are actually like maybe 30 funds who are investing in deep tech, right? So there are a whole lot of investors who are willing to be patient in that way and focus on certain themes. There's a sense that those themes are big enough now to invest in. I think spending patterns have also drastically changed in the last 10 years. So if you look at even like before COVID, the amount that consumers were willing to spend online on digital products, right? Or even on e-commerce or quick commerce, it was a fraction of what it was today, right? So there's been an explosion of expenditure in terms of entertainment products, how much people spend on like social media or like OTTs, audio platforms like Spotify. Huge amount of money being spent, moved away from traditional spends on FMCG companies, which were multinationals, towards local D2C brands. The government and other players are spending huge amounts in the deep tech space. So there's a lot more spending on these categories, and that is spurring a new generation of startups.
Also, just to contrast, when we say there's a lot of capital, there's no shortage of capital. It has to also do with what are the ambitions, what do we want to do, right? The amount of capital required to do certain things, we don't have the capital for, right? I mean, we were just before in the earlier panel talking about the kind of dollars being invested in data centers globally. We don't have those dollars available in this country. There are no companies as large as some of the world's largest companies, nowhere close to that in this country. Obviously, our GDP, our tax collections put certain other constraints around the government's ability to spend. So at absolute levels, we are way below what a country like the US or even China can invest behind infrastructure. And infrastructure is, I mean, whether it is gaming, whether it is AI, whether it is D2C, infrastructure takes time to catch up. I mean, and some of it, things which can be done through a consumer piece, which is, let's say, mobile phone ownership, driving D2C, then that becomes much easier to execute in a country like us. But things which require large amounts of capital to develop infrastructure in.
What I could understand from this and what you already said, you agreed both on the same point that we cannot solely blame a VC to be not patient. There are multiple factors, there are multi-tiered factors that impact that patient to not being that capital to not being really patient as desired. But let's decode that part. Where does this money coming from? In today's time, who are the investors? Where is this money coming from? One. Now, number two is also when we decode this problem that the capital is not patient enough. Why is it happening? What are the factors that's impacting it? And where are the scope of areas where you can work? We can see that there can be much more patient capital. We understand that India has money, but to get that flowing into streams, where are the areas we can work out?
Sure. So just to give you large level blocks, right? So one is VCs ultimately raise money from somebody. Who's that? Investors. Three types of that. One is high net individuals. So that's individual money. And it is not retail investors. Retail investors, the minimum investment required to invest in a venture capital is 1 crore in India. So which means there's only a small set of people who can invest in that. So that's your HNIs. The two is business families which have built businesses, built a lot of wealth, they invest. And third is institutional investors. And actually in this country, the weakest leg of all three is the institutional investor. The government has done something there. It created SIDBI, which is a fund of funds. And it has actually, because of SIDBI, our fund ecosystem is much larger today than before SIDBI came into play. So that was a massive move by the government. It has worked out phenomenally for the government, for the country, for everybody. We got a lot more startups. The government, SIDBI has given the government great returns, right? Because funds gave money to SIDBI. So that has worked out. But where are the large pools of capital? So pension money is large pools of capital. Insurance money is, some of that is started to flow in, but it's like drips and drops, right? It's like you have a huge swimming pool and you can take out 1 cup at a time. So that's the kind of capital which is flowing from these large swimming pools into venture capital. Venture capital is getting cupfuls of capital, and that needs to unlock better.
Now, before we get into sector-specific insights from you both, I want to get deeper into how we can channelize domestic capital better. We understand our startup ecosystem relies around 70-80% on foreign capital. That's not a 100% good sign, but that is kind of a compulsion if we analyze the ecosystem in that way, because there is dry powder sitting with a lot of segments, family offices. You mentioned some of those that are yet to be channelized. What can be some of the measures that we get that dry powder in action?
I think it's very important to get the local institutions and family offices in, because especially if you're raising a fund which is, say, less than 50 million or less than $100 million, you won't have a lot of takers outside in terms of institutions, right? Because all institutions, pension funds, fund of funds, all of these institutions want to invest in funds which are at least a couple of $100 million, so they can allocate a reasonable amount of capital to that, right? So building on that institutional ecosystem will be very important. I think the top 10 or 20 family offices in India, the largest businesses in India, understand the importance of diversification and they're willing to take bets. I read today actually on my way here that 38 funds were launched this year in India, and I know a number of them have had a first close. So clearly there is some appetite now from larger family offices, from Indian institutions to invest, but we still have a long way to go. And I think one answer has been public markets, right? You look at what's happened in the last couple of years. Anyone here who has gone and pitched to families in India to raise, the whole point is like, why should we invest in a liquid asset class? So I think they're yet to learn lessons around diversification, because we've had boom years, right? The last 3 or 4 years since COVID, since the Federal Reserve pumped all of this money into the system, have been exceptional years for the Indian stock market. Then when FIIs pulled out, the Indian retail investors stepped in. So you're not seeing a lot of folks here understand the benefits of diversifying into different asset classes, because we've only seen good years and no one can imagine that public markets will move in a different direction. So I guess we'll see that play out in the next couple of years, Rahul.
We're seeing in some scenes a little
Yeah.
bit recently, but we'll
Yeah.
get to learn more
Yeah.
in some more time.
Yeah.
Rahul, I mean, startups is no new thing. It's not here for a decade, 2 decades, more than that. But why does it that people who can be investors look at is still as a non-viable asset? Where is this lacking? What can be some of the measures that we can channelize that domestic capital coming in? We need more money, more rupees than dollars. How can we see that?
So see, some of it is natural evolution, right? I mean, as we've seen, like more funds came up, as he was saying, more funds came up this year than before. Why does that happening? Because the ecosystem is maturing. You're seeing that investing in startup yields results. When people do something because they believe it is going to benefit them. That's the only point of time you can get somebody to do something, right? He or she absolutely believes this is good for them. And that is a message which takes time to go through to a larger audience, right? So in the beginning, it was seen as something very niche, and it's still seen as a high risk activity. Venture capital is seen as a high risk asset, right? While try and understand that by its own structure, we as a fund, for example, will invest in 18, 20 companies out of my fund. We don't need all 18, 20 to work out. As long as enough of them do well, we will do well as a fund for our investors. From an investor perspective, this understanding is lacking yet. We still are in a country where capital preservation is more highly valued than growing that wealth. So there are two kinds, right? So you'll have investors who want to grow their wealth aggressively, but those are investors who don't have the amount of capital required to really invest in this asset class. And then you have people who are exceedingly wealthy already, who really only care about wealth preservation. And VC doesn't fit that model, though it does. I mean, all long-term money goes into VC because it is the best way to multiply your money over a long periods of time where liquidity is not required, right? So wealth preservation thought process is, I don't need liquidity, right? I just need the wealth to stay. So this messaging has not yet set in India, that for wealth preservation, VC is a great allocation to do.
In terms of investing, irrespective of what sector you invest in, there is a trend which we're saying that investors have been really cautious in last 2 years, especially. We have been talking about and writing about as a part of my job about funding winter. When do we see funding spring like 2021? I don't know. And we should not be seeing it back again. It has impacted a lot of valuations and a lot of funding check size as well. Now, the recent trend which I'm bringing in is there's a consolidation when it comes to the bigger check sizes, and then there is then a lot of investors need to or want to make confident bets in the growth stage funding investments. And then there are a couple of not just couple of many new funds that are actively and very interestingly investing in the early stage startups, irrespective of the sector. How do we see this going forward in the next 6 to 12 months? What will be the next trend of investing we see in when it comes to check sizes, growth stage? How do you analyze this, and what can we expect?
Yeah, no, I was just looking at these numbers this morning because I thought this was a topic you wanted to talk about. And I was looking at how much is invested every year, right? So if you look at 2015, 16, 17, it was about $5 billion every year, right? Then 18 to 19, it went to 10 billion. And that's exactly where we are today, right? So last year was about 13 billion. This year we'll do 11 billion again. So 21, 22, as you alluded to, were anomalies, right? We were coming out, a lot of money coming into the market, and we're not going to get back to that. But for the size of economy we are, plus a number of founders who are playing on this India-US play, building a lot of tools for that market, we're going to continue seeing that number, at least 10 to 12, $13 billion a year, which is substantial, which is 2x as it was in 2015, 16, 17. Huge number of seed funds in the market, pre-seed funds for you to choose from as a founder. So there's no dearth of opportunities for founders to get funded today. And it's also important on the flip side, to your point about quality assets, that investors also make sensible bets. So I would estimate that there are probably 30, 35,000 founders at any given time in a year looking for funding. And if you look at the number of seed deals that get done every year, it's about 700-800 deals a year, the total number of deals happening. So every fund is looking at 100 opportunities, right? We want to each do 3 or 4 or 5 or 6 investments a year. That means we'll each meet at least 500-600 founders a year, maybe more. We'll meet 1,000. We're investing 1 in 100, right? And that's a good clip to keep. We have a huge supply of founders, and we want to choose those which are the highest quality, right? The highest quality founders, building truly differentiated products, building for the right market. So there's loads of capital in the market.
This is
No,
interesting.
not
We're
only
moving
that,
to the
from-
right direction.
See, in my sector, though, there's no funding winter. I mean, if anything, we are in the middle of spring, all guns blazing. Valuations actually, me as an investor, I'm like, really? This is the valuation people are investing in startups in? So valuations in the AI sector have gone up. The amount of capital getting deployed in AI has gone up. I see that trend continuing to go ahead, right? But to his point, I mean, largely agree with him what he's saying at the macro level, right? So macros, but if more funds keep coming up, the amount of capital being deployed will go up, right? It's not gonna double, triple, quadruple so quickly, because that whole India's discovery as a startup nation, I mean, our potential for that has already happened, right? So what happened earlier was that discovery kind of happened. So a lot of capital flew in. But so you don't have that delta happening really very soon again, but that it will keep growing. The amount of capital getting deployed every year, the amount of capital being raised by funds every year, all the trend lines are going up. That's how I see it. Yeah, high level, those big ticket deals, some of them, there'll be lesser of in 1 year, then there'll be again. I mean, this will keep happening, right? It's the cycle of life. But overall, I'm very, very optimistic, and I think everybody should be optimistic. We are in a very good place as a country, as an ecosystem. It's pretty positive, is where I'd come. Leave it at.
So we are in the right direction. Now, before we wrap up and do the last commentary on how we look forward in the next 5 years, I want to bring in the hot topic that has been in the news with gaming. I'm not associating it with you, but your larger point of view. How do you look at industry? Recently, the government's take on real money gaming has happened, and that has happened for good. For the good reasons, and there's much clarity on what government wants to encourage and back vis-a-vis what they don't want to, and that's a clarity for the ecosystem, and that's also better for the consumers as well. How do you look at it, and what clarity do we have on the other end of the consolidation of the sector and investment part also?
Yeah, so no, the government very clearly said it will not allow real money gaming, right? So as of today, there will be no more real money gaming. And I think that's something we figured would happen sooner or later. And for the last 5 years, that's why we've avoided it, right? So we've made a number of investments in gaming, but those are all free casual gaming companies, which monetize through in-app purchases and through advertising, right? And even before the government had stepped in, the spends were already moving from the consumer away from real money games to these free, casual, in-app purchase-led games. And so you saw spends also moving in that direction. So 40% of all gaming spends in India are already in casual or mid-core games. And that's the market that we're looking at. And India has a huge talent pool of people building market games for India and as well as for the world, because a lot of the global gaming studios always had studios here.
This is interesting. That
Yeah.
since
Yeah.
you
Yeah.
just closed your fund,
Yeah.
how excited are you about this space, and what are the areas to be precisely mentioned you're looking at?
So we look at three broad areas. One is interactive media, and I can give some examples over there. We also look at digital platforms, which include some SaaS companies. And lastly, we look at games. On games, I would say it's still tremendously exciting because $1.5 billion a year are spent on these casual games by Indians. That number is only going to grow, and that is more than the Indian box office spends, right? So the entire money that is earned by Bollywood in the entire year, Indian consumers already spend more than that on free-to-play games.
My
So-
apologies to interject. That's
Yeah.
Ntasha joining us on the panel. Have a huge round of applause for her. Looks like she's tired and mad at Gurgaon traffic, but we are also still cursing that road and that traffic. Rahul
No,
got
it's
also
Delhi
late on the
traffic,
panel.
not Gurgaon. We got to Delhi very. It's just crazy.
I'm glad that you're here. Feel free and then feel okay, and then we.
No, go ahead. I finished
feel
my
okay.
point.
Then we
Yeah.
go
Okay,
back to
no,
her.
yeah.
We're still continue on the
Yeah, so I was saying
gaming hot topic.
in casual and mid-core gaming, Indians are spending $1.5 billion a year. That's more than they spend on Bollywood in the entire year. Still a very large, exciting market.
A lot of investors from this particular sector, gaming sector, and
Yeah.
a lot of founders are bullish on India becoming a gaming developer hub.
Yeah.
Building games of from India, those studios from India. How confident are you on this bet? I'm not too sure because a lot of founders flag that we are not ready yet. Where we can be bullish, we can be confident, we can do it in some years. How do you evaluate
No,
this
so actually,
scene and how confident are
Resham,
you?
that's been our goal from day one, to fund those founders. We already have half a dozen founders in the portfolio who are building from India, for India, and for the world. And they're building titles which are exciting for people to play all around the world, not only in India. I think what will also be exciting is you will see Indian IP-based games, right? So based on Indian stories, etc. But so far, we're seeing a lot of people build titles that are sort of well liked and well understood by a global audience. So they monetize as much outside India as they do in India. So there's already a large group of them who are already doing that. But beyond that, we're also investing in spaces outside gaming. And so, for example, we've invested in Supernova, which teaches like spoken English to people who want to just get better at their jobs or want to use English in their daily lives. So we're investing in spaces outside that. We're investors in LOLO now, which has the second largest short drama app. It has over 1.2 million people who pay every month on LOLO for its suite of different products. So you have a very large audience. 1 million people paying every month in India for a digital-only product was unimaginable for 4 or 5 years ago.
Very interesting. Now,
Yeah.
there were some headlines that that says that this sector is set to, in some time, take over the entertainment sector in terms of revenue generation as well. So,
Yeah.
I am looking forward and all the best to you for all your bets. In the meantime, I'm coming to Ntasha. Now we are.
So, I'm going to take off.
Okay.
I have my next thing. I'll be late for that also otherwise. So I've held the fort long enough for you. So thank you. Natasha, all the best.
We're letting you go. A huge round of applause for Rahul as well. Thank you so much, Rahul. Thank you. Now, Ntasha, you can come to this spot if you feel okay. We've been talking on how can we channelize more domestic capital. According to many reports, 70-80% of capital for startup capital, we rely on foreign capital. That's not a 100% good enough flag for India. But for now, we understand that there is a lot of capital sitting in India. We just need to channelize that in a better manner. Startups to be
there is a
seen
lot
as
of capital, and that unfortunately is mostly being channeled to the stock exchange, right? So that's one of the biggest competition we as fund managers feel, is that most of the investment allocation is very skewed towards the exchange, and exchange has given some phenomenal returns so far. But I think it's starting to get a little choppy now with the uncertainty in the geopolitical situation and what's happening in the US. And we're starting to feel the waves of that over here. Even if you see, you mentioned that the VC funding has sort of taken a dip this year. And that sort of proves the point that most of the capital which is being invested in India is led by foreign capital investment, right? And with the uncertainty which is happening over there, everyone is investing in the US market and they're not so keen to invest in emerging markets such as India. So that takes like a big hit, as we are seeing in the listed market as well. There's been a huge outflow of FIIs in the exchange. And what's holding the fort for the exchange so far is the domestic capital, the SIPs which come in, the mutual funds which are holding the position. And as we're talking about this, I think we need to see the ecosystem, the LP ecosystem in India to mature a bit. Because when you talk about investing as LPs over here, I barely see domestic institutional capital, barring SRI and SIDB, which mostly all fund managers get. You don't hear any other names in the ecosystem. And there is still like a lot of maturity which is yet to happen amongst the investors, especially pension funds, life insurance, right? So that sort of investment has still not happened. Even if they allocate a 0.5% of their corpus to the domestic private market, I think that will give like a big access and pool of capital to invest and build this ecosystem. And I think we are seeing the evolution of the family offices in India. And while a lot of family offices now want to take like a more front seat investment when it comes to startup, but I feel that they still have to evolve because they just started investing. And you sort of learn from your mistakes as a private investor, and I'm sure everyone over here agrees with me, you can never get it right every time, or especially the first time you do the investment. So my thing is that for the family offices, they really need to take the highway in terms of investing in funds, domestic funds, rather than go on their own. They should look to partner with some of the domestic GPs over there. And I think there's a concept of anchor funds, which is very popular overseas. And anchor funds have very good allocation in terms of the carry pool and even the management fee, what's negotiated. So I think as family offices, if someone is from a family office over here, they should look at investing from a more mature lens and sort of look at partnering with domestic GPs over here, and where there's a good upside in terms of carry and management fee, and it's a win-win for both. So you do get a participation in the investment process as well as the economics of a fund. At the same time, you're partnering with a more professional domestic GP over here. Like if I talk for myself, I have been investing in the ecosystem for almost a decade. So I did not just start the venture fund without anything. So I learned from the experience and built up on that. And it makes sense to partner with people who've had that investment experience, especially in the private market.
And also who do it as a full-time profession.
Yeah, that sounded like a full-blown pitch to become an investor in startups. And that's a good point.
It's much needed.
I think what you were also alluding to was that a lot of family offices have decided that they think they should make direct that they can do
it better.
That they should do direct investing. But direct investing requires you not only to do it for a very long time, but also requires you to do it full time. And as they realize they're spending their time across a lot of different things, maybe their own businesses as well as different asset classes, I think they'll come to the conclusion you're suggesting. And the other thing you'll realize is that if you look at all the exciting IPOs that are happening, what are all those companies? Those were all completely startups. And I know a lot of family office friends who 3-4 years ago who would have said, oh, well, look at Zomato. How does it make any sense? It's never going to succeed. It'll never be profitable. Zomato's core business, let's just leave Blinkit aside because it's a very fast growing business. Zomato's core business is a highly profitable business. And 3-4 years ago, I don't think anyone understood that. And post its listing, it's gone up like 6x. It was at $50 when it's listed. It's now at $250, right? So clearly, I think investors will realize that there's a huge amount of value being created in this economy from people who are first generation founders, as it was always in the history of India or anywhere in the world. First generation founders did create all the wealth, right? And at that time, they didn't have access to venture capital. They may have got a bank loan. They may have gone to their families for a bit of money. So it took longer to build these businesses, which were built over many decades. And now you can do it through venture capital. And the most profitable business in the next decade will be the ones that list on the stock market.
This is interesting. Now, in the recent, talking of IPOs, Zomato was a good one. There are many other good ones happened that took IPO as a new badge of honor for startups. That we had a full panel on this topic during the day today. But there are a set of IPOs that were not so good in the market as well. We can talk about Bluestone that made a muted debut. There can be many more names. Electric wasn't too good afterwards. Looking at this, you as an investor, what learning can we take from that? Or what advice would you be able to give? There are multiple factors. There are multiple factors that are absolutely not under your control when it comes to a listing or performance post that. But still, what can be the learning from that?
I think the learning is what Ntasha said, that public markets are frothy, right? So the point is that
this was headline worthy.
No, the point is, are there companies coming onto the stock exchange which will be 500 to 1,000 crore businesses in revenue or more? Yes, they are. Are they generating profits? Yes, they are. Have their listings been muted or not, or very successful? Depends on what valuation they listed, right? And if public market investors and anchor investors in that public listing ascribed a value which is more than it should have been, that is to do with the insane frothiness of the market. But long term, are there going to be 50, 100 companies that are very profitable, which are on the Indian stock market, and which started from scratch by first-time entrepreneurs? Then for sure that's going to be the case. The other interesting point is that our expectations are also changing, right? So investing in startups today with the expectation of what their revenue will be 5 or 10 years from now. So if you look at like a couple of years ago, if you had said you want to make 100 crore business, maybe 5 or 10 years ago, you said I'll start like a D2C brand or something, I'll build 100 crore top line. People may have laughed at you, right? If you say today you're starting 100 crore D2C brand, people are not that excited. If that's the eventual size you want to get to, they'll say, no, are you going to be able to build a 500 crore brand, right? So in 10 years from now, the expectation will be that you can build 1,000 crore company, and there will be companies that are able to do that.
We are on the track of evolution, whether it's building startups or whether it's for investors. Before we come to the final point of our discussion, I want your insight on your sector-specific expertise. How do you look at sector where we seeing a lot of investors talking highly about climate tech, sustainability, agri-tech? What is your take on this, and how do you evaluate the startups in that space building?
I think as an investor, the most important thing, I'll not get into the sectors, that's quite broad for me to cover, but I can just say from an investment perspective, while revenue potential is one thing, but I think in the private markets, you normally play the valuation game. So for us to be able to see that this company is being able to scale exponentially, so the vision which the founders have to be able to minimize, the way they sort of build their operating expense, how are they using tech and as an advantage in that to bring down the cost and to be able to scale exponentially. So that becomes very important and crucial, especially for founders over here. So what you need to be pitching to an investor is what's the vision which you have and how big is the vision, whether it's you're talking about fintech, the banking, the unbanked, which is already being done very well with Paytm. That's why they got the funding which they did. Whether it's digitizing expense management, or whether it's building AI, not horizontal AI, but more vertical AI, which will optimize your cost, help you scale exponentially. And one thing I'm seeing about most of the companies which are tech first is that they are disrupting the market fast. They are scaling exponentially fast. They're reaching that revenue milestone way faster with limited capital. And that's the tech advantage which I feel that they have. So AI has become commoditized, and it is getting tech as such is commoditized with VC investment, but with AI it's getting even more commoditized. But I think founders need to have that disruptive and larger than life vision, which convinces a VC that what they're building on has the potential to scale exponentially and has a huge valuation play. So that's
Now
what
for
I would like
startups,
to
we
say.
have had a, as I mentioned, I mean, this is a fair point to be on in the right direction when it comes to startup building, irrespective of the sector. That's the ideal way to go for building a startup. Now, as I mentioned, we have had a great panel on IPO completely. Your understanding on how a startup will set up a milestone. In 2021, we were hearing a lot more about unicorns as a milestone or a status to reach, and then we are today hearing a lot of startups running for IPOs. Whether it's going to be good or not so good, the time will tell. But it has become a new badge of honor for startups. What should be the ideal one? What will be the next milestone? What should be in the right manner for a milestone for a startup?
So I would like to say, just adding to the point of IPOs, some IPOs did well, some did not, right? So I think as a retail investor, and retail investors do get swayed by a lot of D2C, like B2C companies, So if the company is visible like Bluestone, or if you talk about urban company itself, they were subscribed 100x, more than 100x from the retail perspective, but they got very little FIIs. So I think it's important for some of the retail investors, if they're looking at participating in the IPOs, to see what's the participation from an institutional standpoint, because that's a validation as well. And just not leave it to that. More importantly, make sense of how sustainable is the business, and what is the valuation play, or how big or how this business can disrupt with tech as a USP, and to be able to disrupt the status quo in terms of the traditional businesses. What is the opportunity they have in terms of their technology? If you talk about Zomato, their biggest USP is right now they acquired Blinkit, right, a while back, and at that time everyone was just questioning their decision, and right now that's what's driving the valuation. Blinkit is leading the quick commerce space by more than 50%, and that speaks volumes for the e-commerce opportunity. So not just the food delivery, they're also looking at e-commerce. So that added to Zomato's valuation, right? So I think from a retail investor perspective, don't get swayed by something because you see a Bluestone or you see something very visibly right in front of you. So jo dikhta hai, wo bikta hai. You should not have that attitude. You should sort of question it further. I think Grow is a good opportunity. You're already seeing good. I'm not pitching for growth, so sorry, no disclaimer for that. But I'm just saying, that the vision is that they are looking at these Generation X who wants to move away from advisory, investing through an advisor, through doing direct investment. So that's the vision. It's a big vision, and that disruption is happening, and you're seeing youngsters invest on their own pretty much. If you ask a youngster, I'm sure they have a crypto portfolio already, right? Or some stocks, they'll give you some stock tips as well, right? So youngsters are sort of going on their own way, and that's the value proposition you see for someone like Grow, that they will target that audience, and they will have more and more users, which will grow organically because of their positioning.
I'm excited to see that a lot of people in India has now built an appetite for investing, whether it's public market. But I need to see the needle moving for startups investing very soon. This is the final bit of our conversation. Time is already up. Just in 30 seconds, your last closing remarks, and also my question. In my opening comment, Natasha, I mentioned that India has a lot of momentum capital and there is a lack of conviction capital. Though some of them disagreed, but I appreciate that. On the final bit of our conversation, tell me, does India need more capital? If yes, how much?
India needs a lot more capital. I think for us to, if I go to the question of the panel, was $10 trillion economy. For that to happen, we really need to build the supply chain in place. We need investment in manufacturing and build up that demand, and that's what's going to drive the ecosystem. So while digital is lifting the forefront and is taking the front lead at it, but we need to honestly build a stronger might. If you look at China, they're the manufacturing backbone of the world, and we need to see that momentum. We need to see that flip happen from a manufacturing perspective. And mind you, manufacturing is starting to get more and more automated, right? So probably the next generation of manufacturers won't be your traditional manufacturers you see in today's day and age. They would be the technocrats who are setting up with something completely new and novel, bringing down the cost, improving the labor efficiency with the technology and with the machinery which is being used. So tech is going to be a big advantage for even manufacturing, right? And we need that heavy investment to happen in that, in this ecosystem for us to be able to reach that benchmark. Otherwise, even if domestic consumption does increase, which is what the vision is when the GST got revised, it should not be that we are exporting for it because we can't really produce what we consume. So we need to do that.
Good one. Nyasa, how much more dollars? No dollars. Rupees do we need?
How do you convert $1 trillion into rupees? You tell me. But if you want to double GDP or more in the time frame you're suggesting, you will need trillions of dollars to get there. And as we discussed, we're investing 10 or 15 billion dollars a year in venture capital. That probably needs to double or triple. We need a lot more capital at later stages. Actually, I think at the seed stage, there's quite a lot of capital. And across various sectors, even sector-specific funds or generalist funds, that, like I said earlier, there are a lot of funds who are focused on specific spaces. But you need more growth capital in the country. I think any portfolio company which wants to raise like Series B, C, etc., they're always looking for connections abroad, right? They're trying to go on road trips to like East Asia or to the US or to Europe. So we need a lot more money which is available domestically for that.
Final advice for entrepreneurs. Any final advice? 20 seconds or maybe 10 seconds.
Final advice. We're not here to give advice. What do we know? We're investors. If we had great fun ideas on starting businesses, we would do that, right? But I think right now, because AI is making it easier to build businesses, it's much faster to build a business, and it's much easier to build like a website or an app or even like a SaaS company. Differentiation will become very important. And we do see a lot of founders, 10 or 20 or 30 founders, building the exact same product. And I think, I mean, we all see it in different spaces.
Came up in the last
so they all have to really dig deep into what is your competition, how you're different, because the minute they go out there, 1 or 2 of them do get funding, but the 2 to the 30, the third startup to the 30th, don't get anywhere. And so we're always excited to meet people who have obscure ideas, ideas that no one else is thinking about. Because you identify new customers along the way, your time expands. If you're telling me you're going to start like a new Zomato for like Nagpur or something, I mean, I don't think that's that exciting, right?
An interesting point that has come up in the last panel before you add to it on the AI front. Somebody said there are, because I also agree that there are some people in the ecosystem trying to play with AI, even if they are not competing with their ROI plan. But they said that people are trying to put AI after their name and just see if that works. Yeah, your point. Your closing comments.
Mike, I think it's human mentality to see what the other person's doing and be able to set your milestone basis what's happening elsewhere or outside or someone else did. I think you need to, if you want to break the glass ceiling, you need to think out of the box, dare to dream big, and have conviction to be able to follow through that. And that's what defines an entrepreneur, right? An entrepreneur just has a larger than life vision, and he is persistent to just keep following it. So dare to dream and think out of the box, really.
And it's not easy, not just for the founders, but also for investors.
It's very
to make
easy
the right
to dream. Very easy to dream.
And to actualize it.
But be persistent.
That's the point.
And you come to it.
That's the key for all of the entrepreneurs sitting in the room, building and daring to dream big and even bigger. All the very best for all the founders. And on this note, we want to close it. Thank you so much for making time for this. It has been a very insightful and lovely discussion.
Thanks.